All right, welcome everyone to day two. We're pretty excited about how day one went. Got a lot of really positive feedback from everyone. So we're about to take you guys a little bit deeper. And the thing that we really decided we wanted to start everybody out on first, and it's usually something that most trading courses skip over, but we really feel like this is probably one of the most important parts of trading. And most people never learn anything about it, right? And they come in and they don't know how to position size properly. They don't have any risk management. They don't know how to set their stop loss. They're constantly losing money, and they're not gearing themselves or setting themselves up to be in a position to win in the long run. So we're going to take you guys through risk management techniques tonight. We're going to go over the position size calculator in a little bit more depth. We touched on it on the last session just briefly, but we're going to do that properly tonight. We're going to go over effectively setting stop losses and the different methods that you can use to set stop losses. Troy's going to go through back testing and forward testing as well, and knowing your statistics. So what we're teaching you guys is usually what gets taught at the end of most courses, but we've decided to teach this at the start because when you actually go through the trading process, this is actually the first step you go to before when you're placing a trade, right? So we wanted to just get that in and get it really ingrained. So then when we're going through the next few steps over the next week and a half, we already know how to do this. So when we're looking at setups, so, we might find like an SFP or a bull div or something like that, or, an ascending triangle or something, we can actually all trade it and trade it using correct position sizing for our account size and everything like that. So that's what we're going to focus on today. Troy is up first. So I'll handball it across to you, mate.
All right, cheers. We'll get stuck into it. First, I'm just going to cover Discord, guys, because we did offer part of this FTX bootcamp is the 1 month access to both of our Discord servers. So I'll just quickly run over that. Kyle, just real quick, can you see my Discord, or guys in the chat, can you see that? Just going to make sure it's sharing the right information. I'm assuming Y means yes. Yes, wait, cool. All right, so if you're doing this course, I've made a channel today called FTX Free August. So from today onwards until the end of August, the Discord will be free. The only requirement to get in is you'll need to pop your FTX link in here, as these guys are doing. I haven't added them in yet. Once you get this little emoji attached to your entry, that means you've been added in, which then gives you access to both this section here and this section here. Sorry, not the fractal, sorry, the Trader Troy bit here. It's my constant daily updates. And then also the premium section here, which is more of a community-based input. Let's have a look through once you get in. And this will last to the end of August. So it's not exactly an entire month. It's from this now until the end of August. So if you join, end of, what are we in now? We're in July. So yeah, the end of August, sorry. So if you join now, or if you join in 3 weeks, it's still the same amount of time. It'll get cut off on the end of August. So get in, have a look around. This is how you get in. Once you join the Discord, which you can come to here and go add a server. You can either just go join a server, and you can just write the word Bitcoin to get into mine if you wanted. I've got the vanity URL for that. Or you can use the link that was in the email address, the email that was sent out from Kyle over the last couple of days. You'll end up on this page here first. On the drop-down category, you end up with these little sub-channels, and then you've got the FTX information, and then FTX Free August here as well. So make sure you get that done. Pretty awesome community I've built over the last 3-4 years. It's pretty awesome in there. You'll check it out. You'll understand what I mean once you're in. Take your time to learn how to navigate the Discord, both mine and Kyle's. I think Kyle's got the same setup. He'll add you to a role. Once you've got that role, you'll have access for the...
Might just quickly steal a screen from me when you're done.
Yeah, go for it.
And I'll go now. Yeah, sweet. All right. Can you see my screen, guys? All right. So, yeah, basically, everyone, when you come in, you'll either come in at announcements or general chat. I've just got the FTX course, so do the same thing. Come in here, drop your ref link, or give me a tag, and I'll come through and I'll set you up, right, by changing your roles. And then you'll have access to this part of the Discord, right, which is called Market Analysis and Signals. The main chat is this one here with the little guy with the cool sunglasses. It's called General Chat VIP. And so in here, ask any questions or anything like that. Try to refrain from sending me a private message because you don't want to look silly asking questions in general chat. There's heaps of people in the general chat that will be able to answer questions and stuff like that, especially basic ones. So we can sort of help out, you know, obviously me getting overloaded with the same question 150 times. So that's pretty helpful. And you can just ask anything you want in there or chat about anything, post charts and stuff like that, get feedback, any questions about the course or anything like that as well. The other main channel is DAX Trades, and I basically put every single trade that I make in here. Just looking at XTZ at the moment. Had a couple of nice ones on oil. This one here that obviously broke out, and like the silver trade that we've all been looking at. My business partner, who is worth the risk, he posts a lot in altcoin analysis and Bitcoin analysis. He's got some really good trade calls as well. We also do training sessions every couple of weeks as well. And you can catch the recordings of those in here, which is pretty much like its own little course. There's heaps of good info. There's probably about 10 hours of content in there as well. Then we have a gold channel and an oil channel as well. And then there's heaps of different resources and stuff like that through here that Worth the Risk is put together, which is pretty handy, like heaps of different cheat sheets and stuff like that, and how different patterns and stuff like that play out, which is pretty handy. So get in there, have a play around, check it all out. And yeah, feel free to tag us in this group here. But yeah, when you come in, you won't be able to see any of this. So I will need to upgrade your membership. And obviously it's the same, that it will last until the end of August. So cool. That's pretty much it for me. I'll handball back to you, Troy.
Cool. Once we finish this webinar tonight, guys, I'll go through and I'll add each of those people individually after this. So you won't get it just yet. Once we finish tonight, I'll go through and do them all. All right. So make sure they're in there by the end of it if you want in, or it'll be tomorrow, probably afternoon, that I get to then get through it again. Cool. All right. We'll get stuck into the content. We're going to start with risk management techniques. Now, risk management can be looked in multiple ways. I'm going to share my screen. One moment. Cool. Let's bring that chat back up. 2 seconds. Cool. All right. So there's different versions of risk management when it comes to both your capital and trading, and minimizing risk in the sense of spreading capital across exchanges or wallets. It's just because we're in a alpha space, I'd say, and there are a lot of hacks and malicious behavior that goes on in this market, industry as a whole. You want to be smart about how you're managing your funds. Now, if you're only playing with a little bit that's a little bit to yourself, maybe you don't need to be so anal about it. But if you're playing with a large amount of capital, like some of us, you take precautions to protect that, right? So what I've always usually done myself is keep it spread across multiple wallets and exchanges. So it just means that someone maliciously gets into one, whether you get key logged or someone hacks your phone, SIM swaps your phone, and the rest of it, they're only going to get so much if they are successful. That happened to me in 2018. Someone actually tried to SIM swap my phone. I was able to intervene, but pretty scary how quickly and how effective what they were doing was. So be on the ball and don't be reactionary. Be proactive about this and set up your security properly first. I'm not going to suggest which wallets to use or which paper wallets or exchanges to use. I do recommend FTX, and I also use Binance myself. But other than that, I'm not going to mention the wallet brands and the rest of it to use. I'd prefer people do their own due diligence and actually understand where they're putting their money. I myself have got about 3 or 4 different company wallets that I have it on both my phone and my PC. And then they're all linked to 2FA usually as well, the exchanges. Now there's different ways about going to 2FA. A pro tip from an ex-IT background is have it on an offline device, one that actually does not connect to the internet. It could be an old phone, old smartphone, just something that's reliable. It doesn't need to be online, because if you can first install the 2FA program like Google Authenticator or Authy, and then take that device offline and leave it offline, it should be the most secure that way, right? So I usually recommend this to offline devices. Not mandatory, but just a precaution, right? Because there are malicious people out there and they will try. So just stay on top. Next is just sub-accounts on the exchanges, like we covered the other day with FTX. I think they're the first exchange to actually make it that easy. How you literally just open a new sub-account like that and then transfer funds like a bank account. what this allows you to do is, one, spread funds, and two, like we discussed the other night, help your mindset. So when you're in your degenerate account, you can be impulsive, or when you're in your serious large capital account, then you have to have your strict risk management checklist and intact or whatever. What this allows you to do is, if you are feeling like you need to be a bit of a 5-minute candle trader for a night and you're feeling the urge to give it a go and the rest of it, just allocate yourself a little bit on a sub account. And if you lose it, fantastic. If you win, fantastic. Right, you learned something and you got it out of your system, the urge, right? Because we are human. And speaking from experience of running a large community for the last 3-4 years, a lot of people they'd like to say they won't high leverage trade, or they'd like to say they don't get carried away, but I've seen it many times. I've seen it so many times where they just get a bit carried away, and then before you know it, they've lost a lot of funds. They didn't use a sub account, or they didn't use risk management in the sense of limiting how many funds they could have access to at that time. Right, we are human. Don't ever forget that. Right, we can have it all fancy on paper, but you still have these impulsive etc. As Carver just said, it's easy to get more hungry. So if you've just had like, for some of my DGen trading nights, so what that means is I'd spend a good 8 hours maybe or more trading on the 5-minute candles just straight in the zone, and I'd get up to 10 to 20 wins in a row, and you just get more and more egged on by your own ego in a sense, just to keep going and even start risking a bit more. And you get a little bit carried away, so you've got to make sure you stay on top of that. We are human. We do have emotions, right? So just respect that. Exactly, Bo. Sub accounts allow us to have our cake and eat it too. Exactly. It's just something serious. Like you've got to audit yourself, right, from a human perspective. It's easy to say you're not going to do it, and then before you know it, you've just lost $1,000 because you had an impulsive moment. Technical analysis and trading strategies listed in a tick-off style. So if you've got 20 steps, you've got to go for each step one by one and tick it off. All right, and what this does is it helps you prevent forgetting a certain step in your sequence of steps to get into a trade. You may miss looking at a certain aspect if you do it without doing the tick-off style checklist. So say, for instance, your trading strategy is, let's get a clear chart here. So for instance, this is a bull flag here. All right, this is IOTA. This is a chart I trade fairly often. All right, so this is what I'd call a bull flag. So this has been an impulsive move up, right? It's come down, and this particular formation like that is actually a continuation pattern usually. So once you've broken trend and get above here and get that retest, that's usually where you look to go long, stop loss under the low, and then you ride that up, all right? So there's going to be a certain sequence of events that I use before I execute and jump into the trade. It's all good and well to identify it and then start getting FOMO because it is looking good, but you need to, just like Nicholas said in chat, like a pre-flight checklist, you've got to do it. So first, make sure, like this is a USDT pair, make sure Bitcoin is not about to fall off a cliff. So maybe just cross-reference Bitcoin's chart as well. What's Bitcoin doing? Bitcoin's currently at a resistance, a major one, but it's consolidating. It looks healthy enough. And looking at IOTA, if that was happening at the same time, it'd be looking like a great position to take because you've also cross-referenced Bitcoin, which can bring this entire market down. We've seen many times, right? So this dump candle here was from Bitcoin. So you've got to keep that in mind. So if you've got 20 steps or 10 steps, make sure you go through that every single time. Or have a sub account that says you don't need to have those steps, right? And it's just you want to play on pot luck and you want to feel like a casino, just take a chance, take a punt, right? Have an account, sub account for that. But when you're actually playing with your capital, stick to your step-by-step list, and that's what I'm going to cover. And pretty sure it's Tuesday or Thursday next week, how to create that from scratch, and how to make that profitable. And I'll teach you today about back testing and forward testing shortly, which will also complement that as well. Because for me, data talks, and all this chart is, all that we see on this chart, the candles and the wicks and the rest of it, that's just data, right? All it is logged data in a graphical sense. So as the price moved up and down for that period, it's pretty straightforward, right? But the data never lies. So as long as you can understand the data, like the fractal we saw over here, if we know the data behind that, and we know that once this happens, this point here happens, that 80% of the time it's going to carry on, you're going to take that every single time, aren't you? I personally use Trader Travis's bow. I'm not sure if you know who that is, but yeah, okay, Andrew's just mentioned him as well. Yeah. His is fantastic, right? Definitely check his out. Might even give it a bit of a flash on here. I'll ask for his permission first. I think it's fantastic what he's created. So if you've got an 80% chance of this breaking up to the upside, you're going to take that every time. So you need to also have a step-by-step process to make sure that you're taking this with the same checklist every time to achieve the same outcome. So where's your target going to be? It needs to be a disciplined target. You can't just be like, okay, it's taken off. Okay, it looks like it's going to reverse here. I'm going to take profit. Once you've set the trade in motion, you need to allow it to play out because like a casino, all they need is a 1% edge over all the players in the casino, and no matter what happens, they're going to end up winning at the end of the year over a period of time. So even if someone comes in one night and wins big and cleans them out, as long as I've got that 1% edge over time, it does not matter. Exactly, Mark, the law of large numbers. So when you've got a trade and everything looked right and your checklist said get in, you take it every time and you don't move your targets around. You don't manipulate the trade once it's in action. You've got to allow it to play out. And if it gets stopped out, it gets stopped out because more often than not, novice traders will stop it out early here because it looks like it was about to reverse, right? And then it carries on up anyway, and then you're chasing your tail. So if it got stopped and it fell back down, so be it. The 80% still stands, and we've just had unlucky one of the 20%, right? Just an example of, I'll wait for that, actually, I'll wait to get into that because that'll be the back and forth testing. The next thing I wanted to cover is a daily checklist for yourself, right? So you're human, make sure you treat yourself that way. I've got a little thing here in my Discord. You guys can copy this or find the guy on Twitter who created this. It's called a daily checklist. It's pretty straightforward stuff. I'm assuming you can all see this. So it's just a cheat sheet to self-awareness, right? So if you wake up and you've got a migraine, obviously that's not a good day to trade. That's just logic, right? But some people will try and do it anyway, or they'll trade out of desperation. They've already spent the money in their head, so they're trying to reach that amount and they overtrade. So I've got this little daily list here. It's written by Lord Katoshi on Twitter. Great guy. If you don't know who he is, definitely worth following. And it's just go through yourself every day, right? Ask yourself the questions that you need to be on top of that you have a hard time with. Kyle's got a great thing that he shares with people called the Demon Finder, and it's another great way to do it, and maybe he'll cover that. You just got to make sure you're auditing yourself daily or whenever you're going to trade, right? So if you've got Fridays committed to trading, then make sure you start with this. Make sure everything's in set. Make sure your chores are done if you've got chores, or just anything that can wig you out, like from a human point. So for me myself, I get anxiety in a sense, or if my dishes aren't done, or the washing is not done. Just simple day-to-day stuff that needs to be done before I start trading, right? Because it's sitting in the back of my mind. So make sure you're staying on top of this before you jump down and get into your trading. So there's no distractions. Because when you're playing with money, I trade in $50,000 positions, usually around there. And the last thing I want is the washing machine going off or having to fit halfway through a trade that I'm babysitting for whatever reason and the rest of it, right? So just make sure you're staying on top of this. Ask yourself the questions that you wouldn't usually, and this is what allows you to become like disciplined in a sense, right? It's really easy for like a novice trader to jump on the chart and be like, cool, here's a bull flag. I'm going to jump in. I'm going to enter my position, put in my stop loss under the wick here, and then they get stopped out or something stupid happens or they take profit within seconds after it moving out, right? You got to make sure you got a really structured process to the start to finish of the day. Just as it's like a real risk management side from a different perspective, just more of a human perspective. It's just because I've seen so many people come through my community, and a lot of them are very eager at first would be the word, and they just get ahead of themselves. So just trying to bring it down, calm down, right? The market has been here for what, 8, 9 years now. this crypto market. It's not going anywhere soon. There's always another trade. Just relax and get everything in order. Because once you master this stuff, and once you master like the backward and forward testing, which I'll get to shortly, and you know your risk management inside out, that is when you will start actually making profit. A lot of people, like at the moment, DeFi, a lot of people are going to make a lot of money on paper. Very few of them will very few of them will actually take that profit and run. A lot of them watch it going back down, right? They won't have an invalidation point, which is where I think technical analysis trading or technical trading has a edge over fundamental trading. Fundamentals can definitely get you into a nice project early, and you might get 100 times or 10 times your investment into it. But if you don't know where your invalidation point is, or you don't know your risk management inside out, or what your trading strategy was, you're going to watch that profit come all the way back down to where you invested for some of these people, or even go back under, like the majority of people who brought alts in December 2017, right? A lot of them held all the way back down, back past their entry, and then at a loss. They're probably still holding at a loss, some of them, right? So you don't want to be that person. You want to be the person who takes profit, has targets on the way, or know where your invalidation point is constantly. It's a lot of trading is the Dunning-Kruger effect. If you're not sure what that is, I'll just move this to the right. That's when we think we know something, right? Here's a chart. And then we think we know something, and we get really confident. And then the confidence kicks in, something goes wrong, and we lose our confidence, and then we start to gain it again, right? And this happens constantly in your entire journey. Well, for me, this has never stopped. I'm always learning something, confidence goes up, and I learn a little bit more, comes back down, until I've mastered it, right? So just keep that in mind. So when you do have those moments that you're like, I'm feeling great, just make sure you check yourself. Make sure you're covering all bases, because there's a high chance around the corner something's going to get you, and you'll end up coming back down. So keep checking your emotions. If you are feeling euphoric, take some off the table if you're in a winning trade, right? Or just whatever's going on, just keep yourself in check emotionally, because that's usually where most people lose their money, is in emotion. They get FOMO or FUD, or their ego doesn't allow them to cancel, or just whatever, right? Revenge trading, that's emotion. That goes on a lot. It goes on a lot. Make sure you check yourself, right? That's pretty much all I'll cover for the risk management and this side of it. That was more of a human aspect. Kyle's going to go over the risk management side now on the technical aspect, on how to create a risk appetite and how to implement that onto the chart for your stop losses. So it tells you how much you can put into any trade based off where the stop loss and entry is. But I'll let him cover that in detail. Do you want to go over that now, Kyle?
Yep, we'll go over that now.
Go over it, guys.
Screen. All right, guys. So we touched on this just a little bit in the first session, but obviously it's such an important subject that we really need to go over it in much more detail. And it would be great if, while I was going through this, if we could get everybody to do their own version of this. And you can do it on a $50,000 account, or you can do it on your own. If you have a $150,000 account, it's fine to use that. If you've only got a $10,000 account, or a $5,000 account, or a $1,000 account, you can also use that calculation. And when you get the answer, or just type the whole, what we'll do is we'll type the whole calculation like this and the answer into the chat box, and we can all share, just so that, you know, everyone sort of gets the idea and we can sort of have a bit of an activity together, right? So basically what we're going to do is we're going to be looking at an account value of $50,000 USD, right? And so you always want to value your account in USD. Try not to think about it in Australian dollars, because obviously foreign exchange is going to fluctuate. You're going to have to be trying to recalculate it all the time, and it's a pain in the ass, right? You're entering accounts, you're entering your trades in USD value anyway. So just use the USD when you're doing the calculation, right? And what we're going to be looking at here at first is we're going to be doing our risk appetite, right? So we want our risk appetite at the moment to be 1. If we have a trade set up that's, Troy's going to go through statistics and stuff like that. After you've been trading for a while, you sort of start to get a little bit of feedback from your data on what your best setups are, which trades perform the best for you, which ones, are returning the most money. So what we want to do is we want to make sure that we're putting a little bit more weight into the trades that and our setups that return us the most capital and have the best payoffs. And we want to sort of reduce the ones that don't give us as much risk, right? And the easiest way to control that so that we're more weighted towards our best setups is through this metric right here. And that's the risk appetite in our position sizing. So I can easily increase this by going 1.5, right? And so for every 1.5% I have in here, that means that I'm going to be having 1.5 trades compared to if I was doing this on just a single trade, right? If I go 2, it means now I'm going to have the same amount of return as if I was having 2 trades of that same high quality setup as what I was of just having 1 trade of all the others, right? And then if I want to put up to 3, obviously that makes it 3 trades worth of value out of 1 trade compared to if I was just trading any one of my other setups that isn't as good or doesn't have as high a risk reward. So generally, if I have a really good setup, I'll go to about 3 max. Some traders, they go up to 5, but try to avoid going up to 5, guys, because it just means that you're making really big trade sizes for your account. And when you do get stopped out a few times, especially when you're new, you can go on stop loss. You go on stop loss runs for a while where you get stopped out consistently, 5, 6, 7, 8 times. You don't want to nuke your entire account while you're learning. So until you've been trading for like 6 months, absolute minimum, stick to the 1% per trade that you're risking, because they do add up. If you have a low strike rate and you don't know you're not setting your stop loss correctly, you can start to nuke big percentages of your account quite fast, right? So the most important thing about doing this and using correct position sizing is it's actually going to help you in setting up your trades correctly and focusing on putting the stop loss in the right position, right? And so we're going to go and cover off how to do stops now, right? So stop loss is going to be 3.75% from price, right? So let's go and we'll just get any chart up, right? So we can look at this oil trade that's going on at the moment. And so this is where I put my first. So this is the entry here, right? So the setup was an ascending triangle. This is the 1 hour chart. So, it's a pretty big ascending triangle. It had been going for 43 days. This ascending triangle had been building, right? So, coiling up for quite some time, looking like it wanted to finally break out. And so I was watching it back here for a couple of days and it was grinding down, missed the very, very bottom of it, which would have been pretty hard to pick, sort of wicked below a little bit. And then obviously buyer stepped in and pushed it up quite nicely. And you sort of have a little bit of what you might call an SFP of this line here, but you wouldn't get too excited about that being an SFP, right? But that can give us a really clear position for our first stop loss, right? So this is what I would call you'd be running a tight stop loss because it's one level of support away from your entry. If you wanted to be a psychopath, you could sort of enter and put the stop loss here. But if you do, you just need to know that you're going to get stopped out a lot of times. But it might mean your risk to reward is really big. So when it finally does play out, that you make all of that back. That's something you can test for yourself. For me personally, I'd rather have a little bit more space and just allow the market to breathe a little bit because there's nothing more annoying than something like that happening. You're getting stopped out and then the market pushing across in the direction that you expected, right? And if that is happening to you a lot of the time, it just means you're probably setting your stop loss incorrectly, right? So what we want to do here is put your stop loss below below the last level of horizontal support, right? So that is this point here, right? And if I want to go for a wider stop loss, right, which is going to lower my position size, but it's going to mean that I get stopped out less of the time I'm going to get stopped out. So we're going to have less stop outs, we're going to have more profitable trades, and that's going to, obviously affect my risk to reward ratio of the setup that I'm trading, right? And so you can also widen your stop losses if you're still finding you're getting stopped out all the time. And if you're getting wider stop losses and you're still getting stopped out a lot of the time, you might need to reassess what your strategy is, right? But you'll get data on that, so don't stress about it too much. And eventually you can change the setup, right? But something that's as simple as ascending triangle, right? It's pretty easy. The first tight stop loss is on the first level of support, second is on the second level of support. The other way that you can set a stop loss is also by using a thrust candle stop, right? So let's just say I got into this trade here, right? And this is my original stop loss. What I can do is I can raise my stop loss up, right, to other levels. So now that I'm above here, I might want to pull my stop loss up to this level, or I can even pull it up to the thrust candle, which is here. But that also, see how this thrust candle is quite close to the levels of support, right? I want to make sure that I'm not going to get wicked out. And as you can see here, a lot of traders do use the thrust candle like this. So they'll be below that. This is the thrust candle. So this point here, right? A lot of traders do use that as their stop loss, right? And so you can see that that level actually got hunted here and got wicked out multiple times before moving on forward. So you need to be aware of that and just make sure you're pulling it down a little bit more. So I moved my stop loss up and it's somewhere around here now at the moment, right? Just making sure that I'm fully clear of the space if we do come back down for a bullish retest before the rally higher, right? Last night, I basically put out this call in the Discord, right, and said, you know, especially when you look at this on the 4 hour as well, we're basically coming back and longing oil here is pretty much free money, and we got a really nice bounce off there. So looks like we're going to have a bit more of a pullback first, and we'll see what happens. See how this candle ends up closing, but probably going to flag out. Might test support one more time before we move up to close the gap here, because this gap at 45.50, it's pretty much 45.50, was obviously from when we had that huge breakdown that one weekend where it closed here and then opened like, you know, 40-50% lower and just absolutely nuked, right? So that's been open since the 6th of March, and we're expecting that to close. And I wouldn't be surprised if it eventually pushed up to take out this level here, right? And then at least somewhere through here as well. This looks like a pretty clean level as well, right? So, you know, it goes to at least $50 and then possibly pushes towards a 60 level, but that might take a while. So might do something like that. Let's see how she plays out, right? So that's the oil trade anyway that a few of us are on and expecting to play out. Obviously, if this gets breaks down, the standard for an ascending triangle, right? If you break back underneath the support line here, so if we go and do something like this, right, we're going to be back underneath the key support level, and we don't want to be in the trade anymore. So the stop loss will take us out, right? So let's go back to putting this position size in, right? So we'll go to the oil trade. Let's just imagine that this is our trade set up, right? So we'll be in long position. We'll get in here, and this might actually come pretty close. So 3.49, so stop loss is 3.75, right? We'll just change that, 3.49. Right, so now how we put this into our calculation, right? So basically the way that this works is total equity times risk percentage, right? So total equity is the $50,000, right? And you can see the $50,000 there, right? The risk percentage is 1%. So we're going to put 1% in there. So this is how you write a percentage, 0.01, right? And then the stop loss is 3.49. We're going to write that as a percentage here. So it's going to be 0.349. Right, and so obviously it's going to give us a different answer. So what we do, right, is copy it here, and we're just going to go across to Google, right? I'm going to pipe it in here, and we're going to get the answer, right? And so this is the amount of contracts that I need to put into our position size when we go across to the exchange, and then we just load up our trade. And what happens is now if I get stopped out here, if price comes back like this, right, and it stops me out, what that means, I'm going to lose 1% of my account. So I'm going to lose 1% of that $50,000. I hope that makes sense. And that's how you want to calculate your position size. So risk is always based on how much you lose if you get stopped out. And that's why the most important thing on your trade setup is working out the distance from your stop loss to your entry so you can plug that in. So generally this part of it's always going to stay the same, and you just need to change the calculation on this. And you can add this into your spreadsheet if you want to. on your trading on your trading journal. You can add this into your spreadsheet, this calculation, and you can just calculate it for every trade that you do, or you can just have it in your Google or Chrome or whatever it is that you use, and just put the calculation in, and then get the result. So yeah, hopefully that makes sense. Has anybody actually done it so far? Can we get some people dropping some bombs in the chat box? We can get the chat box up. I can't even see it. Here we go.
There's a Q&A section question as well for you. You can find that.
In the Q&A section. All right, nice, Chris H. Very good. $1 million trade size, nice. What is your position? What was the answer for that? How big would your position be? All right, so could you please explain $5,000 account, take percentage and put into lev? Would your stop loss be the same? So leverage doesn't matter, guys. The whole reason for using leverage is, the whole reason for using leverage is so that you don't have to have all your money on the exchange, right? So you can be like, you can have, say, maybe, let's just say you got a $50,000 account, right? You're trading, and you want to trade with $50,000 as your total account size, but you only want to put $10,000 on the exchange. So then all you need to do is use 5x for every trade that you take, right? All these people are just like, I know in some other groups and stuff like that around Facebook, they're always talking about, oh, 10x, no, I did this trade on 10x, and they're actually just putting their entire account in and 10xing their entire account. And that looks really good when you get a couple of trades, but most people generally get stopped out more than they make successful trades. And so then what that's going to mean is it's going to actually nuke the shit out of your trading account very, very quickly. And it's going to put you in a position where you're afraid because your position size is way too big. There's too much risk on the table. Trading is about tilting the statistics in your favor. It's like playing cards, right? You can be the trader that goes, you can be the card player that goes to the casino and just randomly does whatever they feel like, or, I'm going to bet $10,000 on this trade, and I'm going to bet $1,000 on this one and $50,000 on this one. And, for whatever reason, right? Just because you feel like it. Or you can be the card player that goes in there that knows how to count cards, and you can have a specific strategy for every single hand that you get dealt, and you have a specific amount of money that you're going to be betting every single hand, right? So that's the way that we want to be doing it, because what happens then, if you're the person who's card counting and you have your position size correct, is you actually start to take the edge away from the casino, and you start to have the edge, and then you sit there and you just, over time, because you have the edge on the casino, you're going to win in the long run, right? So this is how we actually become the casino, by tilting the statistics in our favor, right? So hopefully that makes sense. And when you start just using leverage just for the sake of using leverage, instead of using leverage to meet your position size that you need for your account, that's when things start to go south really quickly. Sounds like my heart to the roulette table. How did you get the 3.49? Okay, so how I got the 3.49 was from this. So it's distance from my entry to the stop loss. So let's just say, whoops. So I'm going to delete this line here. Right. So my entry was just here, right, on the level, right? And then we can see it was something like this, right? So it's changed a little bit because I moved it, but 3.45, right? So the 3.45 is this 3.49 number here. Hopefully that makes sense.
It's a percentage gap from your entry.
Yeah, it's a percentage gap from my entry.
3.49% away from your entry, yeah.
Yeah.
There's a couple of questions in the Q&A. Can you find that? Can you see that?
All right. Yeah, I've got it up. How do you include exchange fees and the profit loss position size? You sort of like, when you go really deep into your data and stuff like that, you can go into exchange fees and things like that. But it's not really going to affect your position size. It sort of affects your risk reward really, 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 really slightly, but it's not really something that you want to concentrate on. unless you're trading like massive size, like multiple millions of dollars. And, you know, you're probably negotiating with because you're providing liquidity to the market, you're probably negotiating with the exchange to get it down and stuff like that. And you're looking at your risk to reward calculations. But I don't know, me and Troy don't really ever focus on the exchange fees. It's just sort of like a cost of doing business thing. So I keep that outside of this calculation because it just sort of gets in the way a little bit. You click the tool in TradingView. Sorry. What's Tim saying? Can you click the tool in the TradingView that you use to get the green and red percentage tool? So it's this one here, right? So what is it? 1, 2, 3, 4, 5, 6. It's the 7th one down, just above the tick and the ruler, right? It's just this one here. It's long position or short position. So obviously short position is the other way, right? You drag your stop loss to where your stop's going to be, and then you drag your target to where your target's going to be. And it's going to say here your risk to reward ratio 2.41, right?
You can double click it as well if you go into it. There's some settings you can muck around with.
Yeah.
So that can really help you do the account size there as well. Yeah.
Right. So what happens if you change the account size? I've never done that before. Does it give you how much you're going to make and profit? No, I didn't actually know you could do that. There you go. You learn something new every day. Oh, there you go. Yeah, it gives you how much you're going to win and lose.
Yeah, pretty handy.
So 37,000. I don't know. I've never used that before. It's not really something I would get too excited about unless Troy can break it down for you properly. But what do you use for journaling? You can just set up an Excel spreadsheet. I think works really well. A lot of the guys use Trader Trav's journal, which is actually pretty handy. But yeah, you can just set one up and just like put your headings in and stuff like that. Maybe we'll go over this in another session in the next one, and I'll prepare some content for you guys to go over and what to look at. So yeah, but it's just like, you know, your entry, your stop loss, the reason why you entered the trade, a link to the picture of the trade setup, and then did you win or lose, right? And then you can go back and look over that later on. It's really easy to get lazy with journaling. The more you do it, the better, really. Okay, new question. What's the 13426? Can you show it with a smaller account size? Okay, so yeah, that's the 14,326 is the contract size that I'm going to enter into when I make my trade, right? So for $50,000 account, it's going to be 14,326 I need to enter to make sure that when I get stopped out, I'm going to lose 1% of the account, right? So if I change that to 10,000, right? We go like this, put it into my calculator, right? And see how we have a much smaller position size now. Right, so the size of your account obviously is going to dictate the amount that you need to be betting, how much you'll want to risk when you get stopped out, if it's 2% or if it's 3%. That's obviously going to change how much you're going to be betting, because that would obviously double this. So every time I add to 2, it's going to make that, you know, pretty much 6,000, right? And then also the distance to the stop loss, right? So yeah. Next question. So it'll be position size. Yeah. Okay, so the stop loss is based on the charts. Yes. So stop loss is always based on the chart. And so with the setups that we show you guys next week, we will be going through, obviously each one will show you where the stop loss goes for that chart, for that setup, right? So I just showed you where the stop losses go for the ascending triangle, right? Which is this one here, right? Go under the horizontal resistances. And then obviously the 3.45 is the distance from where my entry is to where my stop loss is placed. Okay, do you change your account worth after every trade? Yeah, you would change your account worth after every trade. That's the whole point of it, so that you're always on a percentage of that account size. So if you take a loss, you need to use that to recalculate it. And yeah, obviously if your account increases in size, you still want to be trading with 1%. So your trade size slowly grows with your account, or if you're getting stopped out all the time, your trade size actually becomes smaller and smaller with the size of your account. So try to keep your accounts isolated at the start, guys, while you're still learning. But what you want to do, obviously, when you become a professional trader and you understand really well all your statistics and all your different setups and stuff like that, and how you're trading, you want to start merging all your accounts together. So you might have, say, 200K of trade capital that you want to trade with, but you might have an account on Binance, you might have an account on FTX, you might have an account on BitMEX or something like that. And I would still be trading as if I had that 200K on every account, because it's 200K joint across all the accounts. So that's how professional traders do it, so that they have meaningful trades every time they take a trade. Doesn't matter what exchange or which account that they're using. And that's why you have leverage, because sometimes you might only have you might only have 20K on an account, but you want to trade as if you have 200K on that account. So then you need to use 10x leverage to achieve that. And that's what leverage is for. So you don't have to have all your Bitcoin on the exchange or all your capital out of your bank account on the exchange, because that reduces your counterparty risk. So, you can keep your Bitcoin in your Trezor or your Ledger. You don't have to have it on FTX or on BitMEX, but you can use the leverage so that you can trade like you did have that on there. And then if you're running low on funds or you need a margin call or something like that, you can just upload more cash to the exchange. So it's the same calculation if you're using leverage or not. So it doesn't make any difference if you're using leverage. The only time you would ever use leverage is if you couldn't get let's just say, this is my position size, right? So let's just say 30,000, right? Is my total trade account, right? Let's see what this return is going to be. Right, so it's going to be 17,000. Right, so let's just say I wanted to trade. I had $30,000. So let's just say I've got 3 Bitcoin is my total Bitcoin amount, right? But I only have 10 grand on FTX, right? So then what I would need to do is I would need to use 3x leverage so that I could get the 17. Does that make sense? So you want to try and use as little leverage as possible, because all leverage does is it costs you money in fees, and then it's because you're borrowing money from somebody else to make the trade. And then at the same time, it's also going to increase your liquidation, right? So until you're like an amazing trader that's been trading for years and years and years, and you really shouldn't be just going like, my entire account times 10 on every trade. I mean, I think after trading for years and years and years, you'd realize how retarded that is, and you'd never do it, because it's a great way to lose your entire account in a couple of trades. Yeah, I mean, there's just while you're learning to trade, there's just no real reason to use leverage, to be honest. The only reason you want to be using leverage is when you have capital that you don't want to put on the exchange. That's what leverage is actually designed for, because you want to keep your liquidation price away from your stop loss. Because all using more and more leverage does is put your liquidation price up, which means you're at a higher risk of losing the trade. Especially when you start using like 100x leverage and stuff like that, like that only needs like a 0.42% move in the other direction for you to get stopped out. So what about your firing profit and you add to your position? Would you still avoid that position coming into a high leverage? So if you're going to add to a trade that's already in profit, you need to think about if you want to add, like double down, and then you need to work out what you would do with your position sizing, right? So I don't really add to winners. I think for me, it's just never really worked out. Sometimes I'll add a gain on a trade that's starting to play out, but usually when I'm like firing profit, I'll never add to a trade. I'll just open another trade on another account, or open another trade on futures, right? So, you know, on BitMEX, there's perp swaps and then there's 2 futures. On FTX, you've also got the futures exchanges as well, right? So you go like this, and you go, this is the futures market. So this is the perpetual swap market, right? And then this is the futures, right? So this, I'm not sure what month this one finishes, probably tell me over here, right? And then you've got the next month after that, right? Oh, so that's September, and then this is December, right? And so if I wanted to add to a position, I would just open another trade with correct position sizing according to my stop loss, right? So let's just say, for example, I got long down here, right? And it started to play out, and then I wanted to get long in here, right? I would just be like, okay, I want to get long again in here, but I want to put my stop loss below here. I want to add to this trade, which is going to bring my stop loss up, and that's going to put me in a really bad position. If I get a throwback, move my stop loss to break even, that means I'm probably going to get stopped out at break even, then the trade will continue, right? So what I'm going to do instead is I'm going to go across to the futures exchange, right? And I'll set up my stop loss like this, right? And I'll get into position through here. My stop loss will be below the wick there, right? Or one of the biggest things that you want to do when you're looking at stop losses as well, if this is the level I'm going to put my stop loss at, you're going to just put a line to the left and make sure that you're not stopping out at a clear level of support, right? So this is a multi-touch level, 1, 2, 3, right? You can see that through there, multi-touch levels, right? Is not sort of the area that you want to be putting your stop loss. So for me, I'll be putting my stop loss well below there, and I probably want to be below this level here as well, just to avoid any things like this, right? Especially if you're trading on BitMEX, it loves to hunt people's stops with ridiculously sized wicks and take people out, right? So yeah, that's the way I would do it. And then, you know, I'd work out and use the Fibonacci, right? I'll do something like this and work out where my my stops are going to be, right? My take profit's going to be at the 272 and 618. I haven't programmed them in yet on this exchange, but I'll need to do that soon. So yeah, that's how I would do that. Hopefully that makes sense. Okay, much better way than I was looking at. Nice. So if you answer this, but what is the average hold time for your trades? I mean, it really changes a lot and depends on the time frame that you enter. So if you're entering like you're scalping, you're entering on the 5 minute, then you know it's probably only going to take a couple of hours for the trade to play out. Yes, we can go over the Fibonacci setting. I'll do it now for you guys if you want. And then also, if you're entering like on the daily time frame, your trade might take a month to play out. So typically, I usually enter on the 4 hour or the hourly are my main charts that I watch, and the daily. So I try not to go too low, especially when the market's pretty choppy like this. But when the market is trending really nicely, I will trade the 5 minute. But there's a time and place for it, and you need to not do it all the time because otherwise you'll just get stopped out ridiculous amounts, and it's not worth it in the end. You just end up wasting your time, right? All right, so on Fibonacci, this is a really good little hint for you guys. What I'm going to do is I'm actually going to put this level in here is the 1618. I'm just going to flip it so it's above, right? So change my settings. I'm going to get rid of the trend line that goes through. All right, so it gets rid of that trend line. It's a little bit annoying. We're going to get rid of the background. We're going to make it completely transparent. And then what I usually do is just go and I change this one, turn that on. I go like this and I make it negative 0.272. I'm going to change it to green like that. And then I'm going to change this one as well. Oops. I'm going to go negative 0.618. Right, and we can see here that that's just given us our 2 targets. Right, I'm just going to save that by clicking this button up here. And so when I draw my Fibonacci in, right, just turn this off. When I draw my Fibonacci in, I'm always going from the previous wick low, right, to the wick high. So that's the move there. Make this yellow just so everyone can see. That's the move there that I'm tracking. So we track that impulse. It pulled back to the 50, right, which is also pretty much perfectly in line with our 3 tops through here, right? So it's a nice little entry setup. And then once it breaks out, right, once it breaks out through here, sort of confirms our falling wedge pattern, right? And so we can get in after the breakout or get in through here. End up pumping pretty nicely, right? And as you can see, where's price gone? It's gone straight to target 1. And we can see that people are selling here, which happens quite a lot. And then generally what will happen is we'll go up and we'll test target 2. And that's pretty much how you trade a bull flag, right? It's very, very standard bull flag trade right there. So it's a little strategy that you guys can put away in your little notebooks. And basically what you're doing is you're looking for an impulse. You track the impulse with a Fibonacci. We buy when we come back into the area between the 50 and the 618. So you can stack your orders through like that if you want to, or you can just put it at the 50 or put it at the 618. But sometimes it doesn't always come all the way in to tag the 618. So you sort of have to play it by ear. Sometimes they only come back and tag the 382. And the rule is with this, the deeper that it goes, the lower the target. So generally if you come back to the 618, it's only going to hit target 1. If you stay above the 382, generally it'll go to target 2 pretty quickly because it's more bullish, right? The higher that you hold in the consolidation, the higher in the level of the Fibonacci's you're going to stay above, which means we're going to need to look for higher targets. So yeah, hopefully that makes sense. If I can get the chat box back up, Q&A. All right, so the stop loss is based on the chart and the previous price action. Yes, so the stop loss is always based on the chart, guys. It's never based on like a standard, I'm gonna get stopped out if it moves back 1% or 2%, because the stop loss needs to be where your trade gets invalidated. That's the most important thing you need to remember. So your stop loss needs to be where the trade that you're trading is invalidated. And we'll go over that in the next week and a half when we're going through different setups. We'll show you what the invalidation is of that trade setup. So for this one, right, with our falling wedge, the trade is invalidated if it breaks below the diagonal trend support, right? So if we break below the diagonal trend support, that means that the trade is now invalidated. And so obviously we don't want to be in that trade anymore. So basically, if you can't work out where to put your stop loss, you need to think about, okay, if I'm in this trade, where do I not want to be in this trade any longer? If the price does this and it breaks down through this support, I don't want to be in this trade anymore. And that's generally where your stop loss should be. Now you need to make sure that you're not putting your stop loss in any obvious positions. And we'll go through that when I take you guys through how to trade a swing failure pattern. And that will help a lot of you guys from, getting stopped out and then price goes off in the direction that you thought it would. Okay, what about cross and isolated? Generally, I always use cross. If you're a bit worried about nuking your whole account because you're an early trader, stick to isolated margin and just stick to using low leverage on isolated margin, like 1, 2, 5% type thing. You can use cross margin that will put you up to 100x. And so then you can use that same capital multiple times across different exchanges, but you're still taking, across different markets, but you're still taking a 1% loss of your total account every time you lose a trade. Hopefully that makes sense. You guys use Bybit? I did use Bybit for a little bit. It's an okay exchange. I just think that FTX is a long way ahead with the way that their platform works. Okay, yeah, always use a stop, the long or short tool to calculate. You only lose money when you're wrong 4 in a row if you use this strategy. Yep. So basically he's talking about the risk to reward and how all that works, right? So I'll just read out what he said because it's actually a really good example. So it gives you the risk to reward ratio, the R to R, which is this here, right? This number here, so the 1.5. So if you get stopped out, it's going to be 3.4% to the downside move, right? And if it goes to upside, it's going to be a 5.16. So we've got a 1 to 5, right? He's giving an example of a 3 to 1, right? So if this was a 3 to 1, I'll just make it so it's a 3 to 1, right? Price would need to hit $47, right? and we would have a 3 here. Over to my chat box. Here we go. For every $1 that you bet, you'll be aiming to get at least 3 back if you win. Then you only need to win 1 in every 3 trades to still break even. So hopefully that makes sense. I'll put this in the, it's actually a really good example. So I'll put this on the screen so you guys can see. All right, and so this is how risk to reward basically works. So yeah, we can send this out to you guys if you want, and you can look at it later. But basically, this is the reason why we always use the risk to reward ratio tool. And we gave the example back here. If we had a 3-to-1 risk to reward ratio, right? So for every $1 you bet, you'll be aiming to get at least 3 back, right? And that means that when you win, you only need to win 1 out of every 3 trades to break even overall, right? So obviously the higher that your risk to reward goes, right? So let's just say we're looking for $50 here, right? So now our risk to reward is going to be 5. That means that we can lose, we only need to win 1 in every 5 trades to break even, right? So that means like the higher obviously your R is, which is this point here, right? Your risk to reward. The higher your R is, the better the trading strategy is basically. And that's why we try to enter on lower time frames and stuff like that, so we can get a better risk to reward. But that's a whole other thing. Yeah, so we won't go too deep into R and all that sort of stuff because it'll probably melt a few people's brains. But we do go a little bit further into that. We actually had Trader Travis come on and go into that a little bit in some of the other boot camps and stuff like that we've done, and also in our Altcoin Mastery course. If you guys want to learn more about this sort of stuff, because there's so much, like literally, I'm trying to teach you guys what it took me 2 hours to go through. I'm trying to teach it to you guys in half an hour or something like that. We actually have our Altcoin Mastery course. This 26-hour course. We're trying to cram as much of that into this 5 episodes as possible, but hopefully you guys are starting to pick it up, and you can do your own research into this. There's, I've done YouTube videos on this. There's even more stuff about all this sort of stuff in my Discord as well, in the recordings. And so, yeah, hopefully that can help you guys out. All right, that's pretty much it. Any other questions, guys? We can keep on moving forward. It's probably about time I handballed back to Troy. Can we get the full course somewhere? Yes, the full course is this one, www.altcoinmastery.io/courses. So yeah, punt that one in. Let's bring it up for you guys anyway. Oh, didn't like it. I can't see. Hang on.
You need a dot before the altcoin mastery. Dot. There's no dot.
Hang on, I need to. There we go. There we go. Right, so we just recently changed over the branding to Market Mastery, and the website soon will go to marketmastery.io/courses. So you just go in here, click on Learn More, and then you can pay in Bitcoin or you can pay with credit card, right? So it's up to you guys. So yeah, that's pretty much it. And then obviously this is all the different modules and stuff like that. So it's 26 hours in total. We look over our little cheesy guys with bad haircuts that have got results and stuff like that, and have different reviews. But yeah, so yeah, if you want the full course, that's pretty much it there, and it goes a lot deeper into this sort of stuff because we don't have the full amount of time. So that's pretty much it, man. I'll handball back to you.
Cool. The course is in AUD, guys. We're not going to cheese you and have a low ball number, and then you end up paying USD. And you're like, what the fuck?
Yeah, Australian dollars. This isn't cool.
Yeah, stick to the native currency and don't use cheesy tactics. That's pretty fucked. Anyway.
Yeah, so there is a Nuggets discount. It's NCC10 actually. I'll show you how to put it in. I'll take the screen back 1 second. So you go like this, add to cart, right? And you go here. I'm trying to do 2 of them. Right, update cart. So you just go here and you go NCC10, right? And then you go proceed to checkout. Oops, I've got to apply a coupon, sorry. There you go, and then you give you the $50 off. So yeah, go through and do that if you want the rest of the course. And then you just pay. And you can pay through Bitcoin if you want to. So you can pay PayPal, you can pay through a credit card, through Stripe, and use card details, or you can do the Bitcoin transaction. So yeah, so when you do Bitcoin transactions, sometimes it takes a little bit longer to process. So if you do Bitcoin transaction, it doesn't actually work straight away, send me a message in Discord and I'll get it sorted for you manually through the back end. All right. Thanks a lot. That's pretty much it for me. I'll handball to you, Troy.
Sweet as, I'll get into it. All right, yeah, cool. Screen one. All right, bring the chat up on another window. One moment. Too many screens. Awesome, cool. All right, guys. Those asking about the journal. This is the one that I use. This is Trader Travis's one, and he's asking you a lot of information. Then at the end of it, spits it out in a nice way that shows you all your data. This particular trade journal isn't free. I'll talk to Travis and see if he's wanting to do anything for like a group buy maybe, but you don't have to buy this. You can create your own as well. It's just Excel. And Travis says that himself. He says you don't have to buy mine. If you can create it yourself, go and create it. And it can show you results based on like a particular coin you trade, or which week you were best in, which quarter, right? It asks you what kind of emotion you're feeling when you take your trade. It can also tell you that maybe you're a better FOMO trader than you are a patient trader, right? So that's you want to know this data, right? And data doesn't lie. So if you can log this honestly every single time you take a trade, which I'll show you what it can result in shortly, can really help you in the long term. So all his questions are above the top here, right? Usually there's a drop-down box here for each of these, and you can put those inside yourself. You can choose which exchange and the rest of it. I'm not sure why it's not showing me at the moment, but usually it has them all. And you just record absolutely every piece of data you can. For a link, I'll get that for you guys in the email that we send out. I've got to talk to Travis first. I think it's around $100 or something. You don't have to have this one. Maybe I'll just put it on edit. Nope. So I've got another copy of this as well, but I need to put this one up for now. If it's around $100, you don't have to buy this. This course wasn't to shill stuff, right? It's just to teach you guys to trade. You can create this yourself or find your own. But this is one that I use personally because I think it's absolutely amazing. Have a muck around. We'll get the link out to you guys and check it out. This logs absolutely everything. And logging is, I reckon, just as important as risk management, because in 6 months from now or 12 months from now, if we've done 5 trades or 1,000 trades, we're not going to remember any of the details of those, right? So logging is very important. You need to be able to work out why it used to work or why it's not working, right? And then if you start going on a bit of a drawdown, you need to be able to work out why is this happening. There's a reason for it usually. Either the market structure's changed or you haven't got your everything in order, right? So definitely check out some form of trading journal. You might be able to Google trading journal. Just be careful what you download. There is malicious stuff online. So that's a trading journal. I just thought I'd cover that. Another part of logging, which should go with your trading journal, is actually taking screenshots of the trade set up before you take it and then after you take it. Now, what this allows you to do is audit what you saw and what you missed. So if the trade goes in your favor, then you log it as a winning one, and then you record that data. If you lose that trade, you want to go back and see what you missed, or if you didn't miss anything, it's just confirmation you made the right move, but you lost, right? So the statistics are in your favor, but it doesn't mean that we win every single trade, or doesn't mean that we're going to not have 10 losses in a row, just like we can have 10 wins in a row, right? Tax purposes, you need to log everything really. Depends on which country you're from. I'm in New Zealand. Australia could be different. All right, so definitely talk to your tax financial advisor for that. I'm not going to recommend or suggest anything because if I'm somewhat wrong, I could get you in a bit of trouble. So definitely contact a financial advisor in your country for that one. All right, because there's a lot of people from a lot of different countries in this webinar, and they're all different. Next is just before I was mentioning back testing and forward testing and having a check step-by-step list. So we'll just go to day 2 here, and we'll start on this backward and forward testing here, right? So I'm just going to read this out. Data doesn't lie. And all the technical chart is, the charts that we trade off, is data presented to us in an easy graphical user interface, which I mentioned before, right? So those candles, all it is data, and the data doesn't lie. So because we can go back through years of data on all time frames, we can use this to our advantage to backtest trading strategies and technical analysis methods to the market. I'll show you how I've done it and also helped others do it. So the backtesting, we'll go to that now. So this is this one here. Wait, I need triangle. This is forward testing. I've got it. Here it is. Here it is. So as a community, I started up a project this year for fractal recording. So as a pattern trader, so someone who trades patterns, an example of that was the ascending triangle Kyle showed before, which we could probably find one down here. Just a really, really simple pattern that forms, right? And that is just a triangle where the bottom is ascending and the top is flat, right? Really simple. So if you're good in as a preschool kid and you're able to put the circle blocks in the circle hole, right, you can get these right. Really simple stuff. So this one here has got 2 touches along the top and it's got multiple touches along the bottom, right? And that's what the ascending triangle is. They form bottoms, they form continuation patterns like Kyle showed before on oil, and they also can be a bit of a reversal at the top as well. So this can end up falling down after it fails, right? So if you can identify simple patterns, which a lot of people who have been part of this project have been able to start doing, you can make profitable trades one after another after another. I'll just show you what capturing data of patterns can allow you to see and achieve. So I'm going to show you just one of the ones that we've recorded this year. There's been 446 entries. So this is what backtesting is. This is taking specific data, going backwards in time on a chart. So this, for instance, is in 2019, 2018. We're using old data to backtest a strategy, right? So this is the fractal we were monitoring. And then by backtesting a trading strategy or technical analysis on this, we can come back and see that data in real time. So in this particular one here, right? How much is pattern trading part of your trading strategy? Massive. For me, massive, dude. Massive. I combine fractals with Ichimoku, and that's majority of it, and I've got my own custom indicator just to complement that. Which window today? So going to the back testing, I'm going to show you some pretty awesome data, right? Trend, for this one, we were logging trend. So was the trend originally up, down, or sideways, right? So these patterns were found more often in an uptrend than they were in a downtrend. So in an uptrend, you've already increased your chances of a successful trade based on the information further lower, right? And also the higher time frame trend. So if you're on a 4-hour and you found an ascending triangle on the 4-hour, but the higher time frame trend is down, you're going to end up decreasing your chances as well. So all these percentages, they start to come together to give you an actual back-tested formula for a particular pattern like this. So we go to the ascending triangle here. If we can start to fine-tune and pick out of the data of, depending on what we've recorded, we can create nearly a perfect strategy of taking this trade. And that's how I've got my 84% win rate trade so far. And that is the ascending triangle, which I'll teach you guys how to trade and take that every single time. And then each one of these back-tested data points that are working in your favor, you then go and cross-reference that to your chart, right? So one of the particular things that we found was very reliable was the volume weighted moving average, right? And as long as it's above the 30, where are we here? We'll make that a bit thicker. As long as this is above the 30 coming to the break, right? It usually launches straight to our target. So this is just one of the indicators out of the many that we've back tested. So I'll just find the VWMA in here somewhere. Here we go. So just the volume weighted moving average, right? Yeah, so I actually backed it, Bo, I'll just quickly, on your comment, there's a lot of technical analysis books out there, and I've actually gone through them all, and they're only based off about 10 or 20 entries of a fractal, and the fractals are actually quite warped. I wouldn't recommend those for new age trading, to be honest. I wouldn't recommend those books. Definitely have a read through them, get an idea of how they work, why they work, and the rest of it. But the data they gave was rubbish compared to what my data spitting out, right? So 446 entries over many years of data, because I can show you up the top here. Fear and greed index, for instance. We've got as much data as we can, different time frames. But this is the probably the most what you're referring to what you're saying. We've gone back years, right, and we found all of the ascending triangles and all the time frames for Bitcoin and the many altcoins as well. It might be up here. I'm just going to be careful. There's the email addresses just above here somewhere. Here we go. So this is for all the altcoins, Bitcoin, and the rest of it, right? So this is real-time data for the market that we're trading. I think it doesn't get better than this, right? This is just Google's Google. On the name. We go file new.
Google Docs.
Google Form. I think it's a form. And you just got to
Google
customize the hell out of it to be able to achieve that, right? So as a community, we've created this amazing data that tells you, based on what's going on, right, the percent chances of it breaking to your side. So for instance, we've already got, just based off the ascending triangle fractal, which we've identified here, plus just a single 30 volume weighted moving average, as long as price is above it, moving to the break, right, your chance of a breakup is hugely high. Now, if we go and add an extra feature here, as like RSI, right? So as long as the RSI is above 50, right, at the same time, so we're just going to put that into here, make that 50. As long as the RSI is also above the 50 point for the entire period here, see how it's above this and also above this, you've just increased your chances tenfold again, right? So as long as those two are in favor, you've got a great chance of it. We can go to more data, right? So what else have we got here? Stochastic, right? If it's ranging between 50 and 80, increases your chances again. Now, there's obviously, if you add 48% to, say, 41% and then to 65%, you're not going to have a 200% chance of getting that trade right. There's diminishing returns, and that's why we've used a Google AI process to achieve that. So this is a project we've been working on as a team for months. So not anyone can just jump in just yet. I'll work out how to get that out to people who do want to be a part of that. At the moment, it's really only for my long-term private Discord members. So that's not a shill. I'm not trying to shill you to go join the private team, but this is taking a lot of people a lot of hours to achieve. So I'm not really willing just to throw it at willy-nilly, but I am going to show you the data and how seriously important it is to know your data, right? So it's one thing to jump on a trade and be like, oh, here's cool, here's a bull flag, I'm going to take it. But you don't know your statistics. And what you can do with your statistics is increase that risk appetite that Kyle was talking about earlier. Now, you shouldn't do that within the first 6 months of trading regardless. Stick to 1 to 2%. But once you've got backed data like that and it says 84% of the time you're going to win this trade, then maybe on that particular trade setup, you can increase that risk appetite, if that makes sense. Cool. I'll go back to that. Where is it? It's taken hundreds of man hours to get what this is, right? So I don't want to give away willy-nilly, and the guys that have put the effort in to achieve this, they don't deserve to be just handed out. So we can talk about this later, and I can mention something in Discord at a later date. But I just really want to show you guys the power of data, right? Because data doesn't lie. There's no opinion in this. This is many individuals all what is it called? Uploading their own data, which comes together as a collective opinion, right? Where if you ask someone their opinion on MACD, right, they may have a completely different person to someone else, but when you bring all their opinions together in data form, it doesn't lie, right? So my custom indicator, which complements the trading strategy, increases it again, right? Another custom indicator, and then there's how to take profit, right? There's fibs, which fibs it bounces off, where to enter your position, right? And you can do this yourselves, guys. So if you can learn how to use Google Sheets, Google Forms, you can create this kind of data recording yourself. for back testing, and you can do unlimited amount of back testing on this, right? So this is a daily time frame. We can go down to the 1 hour and find some more ascending triangles, right? Take me a second. I'll probably find one on Bitcoin. Maybe. This market's been pretty horrible lately. Maybe. This chopper's horrible. Yeah, can't find crap at the moment. Sorry, guys. There's more of a symmetrical. So what we're doing part of this project is we're just recording all the fractals and all the data that goes with it. I can't really find one right now. I'm not going to waste too much of you guys' time trying to find one. But we know exactly where to take our position. We know the strike rate, and we know where the best place to have a stop loss is. If target one is going to hit, right? So as long as you take the specific setup, 84% of the time it'll also hit your target. So not will only the trade play out in the direction you want it to, it'll actually hit your target 84% of the time as well, right? And then target two as well. So this kind of information could give you, okay, well, we should probably take most off at target one, and then let a bit run to target two, right? So when we go back to this on the daily, we'll go back to that ascending triangle. I'll show you how to find measured moves on this, which will be a part of the trading strategy I teach on another day, but just a real quick one for this. So this is how I trade them. There are many different ways to trade or approach fractals. I think I've mastered them, but there's always another way to approach the same market, and I don't dismiss that, right? So for me, the furthest point within the fractal is going to be target one from the point of break, right? So point of break's here. You can see we're price rejected, right? So this is where everyone started taking profits and dumping, and you can see that in the candle. So everyone who understood the fractal knew that was time to take profit, and you could re-enter down here if that was the trade, right? Because as a trader, you want to take the trade setup and then take profit at the target measured move. If you're an investor, you want to get in down here and just let this run the whole time. But as a trader, you can start taking profit, which is what creates our market, is everyone's trading on different time frames and different durations, right? Just off topic, but curious nevertheless, I've seen. Yeah. Okay. So this is back testing, and to achieve this, pretty much all you have to do is create something like this and just record it all. Record all the data you can. Logging trades helps. Forward test, because that means you've taken that specific trade, or you can do just logging like something as simple as this. And for instance, the ascending triangle, there has to be 2 support touches, 3 resistance touches, or depends on how you set it up, above that 30 VWMA we just mentioned. First retest must close above the 0.618% fib. So to do that, I would be grabbing this, dragging that up to, sorry, about here, right? So the first come down before we went back up was off the 0.618 fib over here, right? So it's exactly where it should do. If you guys are in Alex's group, Nuggets News, right, he loves his 618 bounces, and that's a perfect example there. And that usually means that your pattern is going to have a higher chance of playing out if you do get a bounce off here, or the 318. And that's the beautiful thing about this data is when we log the fibs, where have we got the fibs here? So it actually tells us which fib we came down to, and then where it's going to head, which fib it reaches as a target. I think that's down here further. That'll be up. All right, but you get the idea of data, right? And this is back testing. You guys can achieve this yourself with a trading strategy. You need to work out what your trading strategy is if you don't have one. You can always follow someone else's, but how you trade and how they trade will be completely different. So if you jump on someone's trading group and you're just trying to copy their strategy, quite often it won't work out. You might be able to mimic it, but quite often it won't work out. I've had a lot of people who have joined other people's communities out there over the years, and then it ended up in my Discord. Not to shield myself, but they'll come in and said the strategy just doesn't always work. The market changes. It's not helping. I need to learn how to find my own strategy or create what works for me instead of just trying to do a step-by-step guide strategy over and over and over again and not understand why it doesn't work or why it does work, right? So you really want to learn the ins and outs of the market and when to apply certain strategies, which is what this is one of the ones I'll teach you guys here, which is based off a step-by-step checklist. But this is made for a trending market. See, trending. So you can't use this all the time. And when it does allow for it to be moved, it has a stupidly high strike rate, right? And all your variables are already accounted for. When you're allowed to move your stop loss, how you're allowed to move it, and the rest of it's all accounted for in this. So once you've started the trade, you don't actually have an excuse to do anything other than buy and sell. Everything else is already told what you are and are not allowed to do. All right. So that's having data and a step-by-step checklist. When it comes, Ichimoku is a custom indicator. It's a little bit of a hard one to get your mind around, and I won't go into too much detail on it now. I'll just show it on the chart so you can see it. Exactly, Timothy. It was absolutely useless during that, and if you tried to trade it, you would have got completely stopped out. What we're seeing on the screen now, all these squiggly lines and the cloud, that's the Ichimoku indicator. Now, it's not easy to get your head around at first, and I'm not going to try and teach you it right now in a crash course in 10 minutes. But it's a very powerful indicator when you understand it. There are people out there who dismiss the indicator. I think that's because they fail to understand how it works and the methodology to it. If you guys watched that video that me and Cole put out on Monday, I mentioned that Ichimoku indicator was calling volatility within about 24 hours. And then within that period, Tuesday, Wednesday, whatever, we went up, right? So if you understand your tools, you definitely you'll achieve more, right? But if you stick to people's opinions and not do the back testing yourself, you're never going to really know. And that's why I do all my own back testing, and that's why we created this project to get back testing taken to an entirely new level, right? Because data does not lie, and this market is not going anywhere. So take the time to do the back testing, so when you do start trading, you can do it with confidence. And once you've proven to yourself that your back testing and forward testing paid off, you can then start increasing that risk appetite because you're starting to become more of an experienced trader. I'm not saying jump straight into a 5%. You can go from 1 to 1.5 to 2, 2.53. Just earn the right to increase that. Don't feel like you want to get greedy and jump up real quick because that's where you get wrecked. Maybe it's not a risk to share as not everyone understands. Team, give the framework to seed. Yes, I've got a couple of videos on how did you spot the pattern then to then backtest. So for instance, there are multiple patterns that play out in a market and I'm aware of most of them. And that's just because I realized patterns were happening before I realized technical analysis was even a thing. The market plays in specific ways over and over and over again, like the bull flag and the rest of it. They're just really easy to pick up, right? So when you start to see, like here's an ascending triangle here, a small one, right? Here we go. Where it's just an increasing on the bottom, but the top's flat, and then it breaks out. Yes, technical analysis is the same across all markets. Cool. All right, we'll go back. Yeah, Stephen Lee, I 100% agree, dude. I think there's some form of autism going on there as well. I don't know what's going on, man, but it helps a lot. It came to me before anything else. I realized really quickly these candles and patterns meant specific outcomes really quickly. So moving on to forward testing. Forward testing is a different ball game. This it means that you're risking capital. Yes, this has been recorded. It means you're risking capital and live trading. So you're bringing that human side into it to backtest, to forward test your back tested strategy approach. So, for instance, this ascending triangle we've been doing. Yeah, I got pretty high, dude. Got pretty high on that test. I think I was 31, 32. I don't know what's going on. All right. So forward testing is a different story. That's when you put capital on the line and then you actually risk it. And then once you put money on, like in a poker game, a home poker game, if you're playing for no money, people get silly and just do silly things. Anyone who plays poker will know that. Like home games with no money usually don't go very far, not very entertaining. But as soon as someone puts $5 into the game, right, the entire persona changes It becomes very competitive very quickly, and people want to protect their capital, and a completely different approach across all players plays out. And that's what forward testing is. It's when you've actually got capital on the line, right? And it can go against you and you can lose money. That's the human side that's hard to account for in backtesting. So backtesting, when you see these charts and you go back years and years of data, it's easy to pull up all this. It's another thing entirely to trade it. So forward testing is then taking the trade based off your data and then logging that data as well. So real-time trading and logging that data, which you should be logging anyway. But if you're logging a specific trading strategy, right, we'll go back to here. What you can do is log it as an individual thing like this. And every time you take it, you mentioned, did it hit your target? Yes, once. And then if next time it does, twice. If it didn't hit it, 0, right? And you need to do this every time. It depends on the market, Vlad. Usually I had up to 5 to 10 trades going at once, if the trading strategy is allowed for it. This entire year, I've done bugger all trading, to be honest, and usually only one at a time. So it depends on the market, depends on my own state of mind or what the market's been doing, right? We had COVID into then complete sideways. So for me, there was very little trading to be done this year. Well, in the Q2 and Q3 anyway. Q1, I think we smashed it. Q1 was pretty good. And then you need to log all this data. So if then the back testing data and the forward testing data come forward and say, this is a fantastic strategy, then you can start increasing that risk appetite. Because even as a human, when you start taking that trade, it's playing out how it should, right? And your emotions aren't getting the better of you when you stuff up the trade. Because that's usually how most people ruin their trades, is manipulating it, starting moving their stop losses around, taking profit too early, and they're constantly wrecking themselves. I've got a trader that I've been training and helping and guiding for a couple of years. His name is Kenny. He actually met me and Kyle at Kyle's restaurant in 2018. He was 59 years old at the time and had no idea how to even navigate TradingView. And now I've got him a part of my fractal project. And one of the ones that we've been trading and going over and got the data for was both a symmetrical, which is when the top and bottom come in, and also an ascending triangle. So this is forward testing. He's actually taken this strategy, applied it, and it's played out over and over and over again, and he's logged this, right? So he had a massive win streak, and that's because of the data allowed it, right? It's constantly taking those trades over and over. So whenever you see Kenny in this chat, because you guys will all have access to this now, you'll see that data doesn't lie, right? And he put the effort in. He learned this as a 59-year-old. Now he's now 61 because he's been here for 2 years, and he's smashing it. I'm very proud of him. But that's what data allows you to do. So now you can have confidence, right? So really wanted to smash that into you guys' heads. Data doesn't lie, and people's opinions can fuck off, right? Get that data, back test it, forward test it, fine tune it, and smash this market. All right, I'll pass it back to you, Kyle, for the next bit, your stop loss placement.
All right. We sort of covered this off a little bit just before.
Maybe to show them like looking left and where else to look for in the stop losses other than where to place. Yeah.
So, right, let's use Ichimoku Cloud for example. Some of you guys are in Troy's group and stuff like that. He likes to use the traditional cloud. I like to use the double settings, which is basically just the 2-day cloud, which some people call the crypto settings, whatever. I mean, this is just the one. They both work, right? Troy has data that says that the traditional cloud works better than the 2-day one, but the 2-day one has bigger moves generally for the edge-to-edge trades. So whatever, you can use whichever one you want. We'll just use this one as an example because it's the one that I learned how to use Ichimoku Cloud on this, on these settings, and they've worked for me, so I can't complain too much. So let's just clean this up, and what we'll do is we'll take a look at how, if we're using Ichimoku Cloud, we might want to enter this trade. So just say this was our trade setup based on Ichimoku. We're all like, okay, we're bouncing off the cloud multiple times. Every time it seems to come into the cloud, we seem to be bouncing off that. So I'm looking at that at the moment. I want to get some sort of an entry throughout here. Now, what we could do is look for a pin candle, which is generally an entry candle. So one like this, for example, right? That's a pin. So we're looking for candles that are pins. They generally are like this. So it's a square shape like that. And then you've got a long wick, with sometimes you get a little bit of a wick out the top as well, all right? It's not going to be nice and symmetrical for me, but you guys get the gist, right? So we're looking for an entry candle, something like that. Now, these work so well because a lot of the time what you can do is you can put your stop loss below the wick and generally you don't get stopped out. I did actually try to long this one here and I got swept, unfortunately. All right, I got SFP'd by this one, and then this one actually ended up being the one that played out. I didn't retake the trade because I sort of got frustrated after this massive sideways action throughout here for so long, but I probably, should have stuck to my trading plan and retaken this candle here and put my stop loss underneath that. So the trade would have looked like this, get in on the close, right? Because we're bouncing off the cloud again. All right, I can put my stop loss underneath there. And then this trade, because we're sort of matching that in with the falling wedge, right? We're matching this in with the falling wedge, right? So we've got a falling wedge basically into the top of the cloud and it's respecting the top of the cloud, right? So we're sort of putting all our different strategies in together. That's generally what you want to do. Like I always say, at least look for 3 compelling reasons why you want to take a trade, right? So we've got the falling wedge. We're bouncing off the top of the cloud. Now we're breaking out of the falling wedge. We've also got our pin candles that, starting to show us that there's a little bit of selling to the downside. And then, you might have an indicator which gives you entry signals like this or something like that. Or you might have like a bull div or something. Or the other one as well here is we've got our stochastics crossover and we start to have a swing high on the daily, right? So that sort of starts to kick in around here and starts to push up, right? And so then we'll be looking for this point here is generally the way you take profit, the first sort of hump, right, through here. So the first rally at the top, right? And then it would be the top, right? So this would be take profit 1, take profit 2. This one's pretty close here. So, for me, I think it's more likely they're probably going to push to 10K. So I would be looking at this level here would make the most sense for my take profit. Now we can also get up our Fibonacci tool. Find it. It's this one here, right? And all I'm going to do is I'm going to take the high, right? So I'm going to go the top, right, to the bottom. I'm just tracking that move from there to there, right? So 0.1 to 0.2, right? And what this is going to do is going to give me targets on the other side, and it's also going to give me some levels that I can look at. I'm just going to get rid of the Ichimoku cloud because it makes it a little bit hard to see everything that's going on, right? And so what we can look for is where there's 0.618 is, which is generally a pretty clean level that price likes to come back to. So maybe that will be our take profit 1, right? We can calculate based off that. So this is going to give us a 5.8 risk to reward. So that means that I can lose 5.8 trades, right? And only make one of those trades as a profitable trade, as a winner, and I'll break even, right? So that's a really good tip for using entries and having your stop loss, right? And we're going to go through SFPs next week, so we won't go into it too much, but you could also have used this one here and then your stop loss would have been below this wick, right? And sort of looked for the same type of trade setup, right? So, right, it'd be something like this. Hopefully that makes sense. One of the biggest things that you want to do as well is always be looking left and making sure that you're not going to be putting your stop loss into a direct level of support, right? When you start to look at more high time frame moves and stuff like that, like if I was entering this trade, and I was entering on the daily, we're looking at this order block here. And usually when you have a pump, right, usually on most flags end up looking the same. What happens is there's a really strong candle, and then you have a red candle, or you have a couple of really strong candles, and then you have a red candle like this, and then it continues up a little bit more. And that's usually where this flag starts, and then you pump a little bit, and then you start chopping around in that range. What if you guys end up becoming, quite advanced traders and scalping on the lower time frames and stuff like that, a really pro tip if you're going to be trading bull flags on the 5-minute is to put your next entry candle at the first red candle, which is be this one, for example. And generally what happens is price bounces off that. We see as soon as we got below this here, obviously people started buying again there. I'll give you another example of pretty much exactly the same thing, right? We start pushing up here, right? And then we have the ridiculous blow off top, right? We highlight this little guy here, right? And this is our daily order block. And then when we come back, we can see that people are buying every time we come down into this order block. It's just a thing that people do. I don't know if there's a psychological reason behind it, but people always look for that candle that went in the other direction, right? And I'll show you another example of that on the weekly, right? I'm just going to do this. All right, we'll just finish off this week. All right, so now we've topped out, right? And we're looking at this. Where do you guys think people are going to be looking to as the next level of support? They're going to go to this candle. And it always happens. I don't know why, but it's just how it works, right? And then we can watch and see how this plays out. And bang, it comes and perfectly tags it, right? Don't ask me why this happens, but it just happens, and it happens all the time on all time frames. So it's a pro little tip, and test it out for yourself. A lot of times with bull flags, it will bounce off that area first. So yeah, it just happens over and over again, right? So we can use that as a method to make sure we set our stop loss below that area as well, right? The other thing as well is we want to make sure that we're not setting our stop loss into clear areas of liquidation pools that bulls or bears are going to be using. Like for example, here, right? This is a perfect example, right? So below this area, right, is going to be where generally you're going to find the liquidity pool, right? Because let's just say that we're looking at this like this, and people might be looking at this and they might be going like, holy crap, this thing is going to bounce and it's going to fly and whatever, I want to get back into Bitcoin because I took profit up here or something like that, right? They're going to get into a position through here, thinking that, maybe this is a symmetrical triangle through here. I mean, it's a pretty ugly one, but they might be looking at it like this, thinking that price is going to bounce, break out like that and push up higher. So they're going to be putting their entry like that. Their stop loss is either going to be below there or it's going to be below this level here, right? And then generally what people do is they give a little bit of space, right, just below the wicks to make sure that they don't get stopped out, right? And then let's see what happens. Whales know this. They know that that's the liquidity that they want to get back into the market. And so what they're waiting for is they're waiting for the low of the horizontal level to get swept, right? And then we get what's called the swing failure pattern, right? Where we sweep the lows, we get our nice entry candle here, which is what I was talking about just before, right? The entry candles with the long wick and the small body like that, which we call a bull hammer or pin reversal candle. And then that actually turns into morning star reversal, and then price moves to the upside. So yeah, right? And then if we're going to take this trade, the way that we would take that, the entry would be on the candle close, and then our stop loss will be below this wick. Right, I hope that makes sense. In terms of the other way that you can use a stop loss or to try and find a trade setup, maybe we'll go to silver because I had a nice breakout recently, right? You can set your trade up something like this, right, and use a thrust candle. So maybe go to the daily. Right, so when you have a breakout or something like that, you can either buy the bullish retest, right? Which sometimes it doesn't always happen, but a lot of the time it does. You can get the bullish retest and you can put your stop loss below the last thrust candle. So the thrust candle is the candle that breaks out. Sometimes what I do is I will move my stop loss up to be below. So I might have had it like down below this level here, because that's, you know, the basic area that you would put for for the ascending triangle, right? You'd be able to put it below here, stop loss below here, or below here would make the most sense, right? And then when you get the breakout and it starts to move up, you can start to, after you get the bullish retest and it starts to continue back on, you can start to move your stop loss up to below the thrust candle, right? And then after it breaks out and starts pushing on here, then you can move your stop loss to the next level of support, right? And then you have this flag pattern here, right? So you see how bulls are defending the previous swing high. And this will be the easiest sort of setup that you're ever going to get in your entire life, guys. It's a breakout followed by a pullback and then continuation, right? And sometimes it doesn't come back for the second, but you know, this is what you would call a double bottom, right? And then you can either buy in here, you can buy here, or you can buy here. This is like super basic stuff that everybody should be able to get setups like this. And it's just basically support and resistance flip, right? It's really, really easy. We go through support and resistance flips in the course a little bit more detail. But yeah, anybody should be able to trade these. You're just looking for the previous swing high. So we call this point here, right? We call that the swing high pre-break, right? So it was the last high before we broke out. So what you can do if you're going to trade a setup like this, right? We're getting in a long position, right? And so we're looking at the market, and it's like this, right? Looking at the market like this, and so we're okay, so this was the last high pre-break, right? And we're going to just see, we're just going to sit here and we're going to watch and see what it does, right? So, okay, it's going a little bit below the candle, then obviously getting rejected from breaking down. So you're looking at this sort of stuff. It's sort of what you like to see. So dipping below the key level, right? Taking out people's stops, stop hunting, but it's getting defended. So you could get into a trade, just say you wanted to long this, you get into a trade and got long there, right? And then we could use the thrust candle, which is this one here. And it's a pretty nice thrust candle, gives us a little bit of space from the level of support, right? And it's called the thrust candle because it breaks out through the level of support. So we keep our stop loss below there, and that's going to keep us usually pretty safe because there will be whales that will try and defend that, right? And we'll see how this obviously comes back, right? Speed it up a little bit, right? So we could have got in again. Let's just say we didn't get in, and we see this sort of action happening, right? We'll go and see what the next candle looks like. So when you start seeing this sort of action, it looks like that's going to reverse pretty obviously there. You can either get in at the close of this candle or this candle here. Both look pretty good. I would still use this thrust candle here as my stop loss. So I want to be below the wick of the thrust candle, right? And then I want to be, looking for a higher move. On this one, I'd probably use Fibonacci, right? Or I would be getting into the ascending triangle. I'd be getting into that late. So I'd be using the ascending triangle target. So I'd be piggybacking off that. So I'll do something like this instead, right? And I'll go down to the bottom there, right? So I'm going from I'm just using, where's my arrow? Here it is, right? So we're just going from the bottom wick, right, to the top. So I'm just measuring this thrust impulse. That's how you use Fibonacci, right? So then I'll probably use this as my target, right? And then I'd be looking something like this. So 4.24, right? 8% to the upside, 2% to the downside. That's the sort of trade that I'd be pretty happy with, right? And then, we all know silver ends up absolutely launching, right? So I would have been a nice little trade, right? So yeah, any questions on that, guys? All right, we've got 28 people in the chat. Any good questions that I should answer, Troy, if you've been reading the chat? Yeah, bullish engulfing through resistance, pretty much.
Oh, all good, all good. Everything's fine.
Awesome. Works on all time frames. Carl. Yes, order blocks do work on all time frames, but the weekly order blocks are always the best, and price reacts to them the most. So I'll always give most weight to the weeklies, give a bit of weight to the dailies as well. Not so much to an hourly or a 4 hour though, to be honest. But sometimes I'll look at like important 5-minute ones, like ones that are going to support the flag. It just happens a lot. If you watch the 5-minute time frame when the market's bullish, a lot of the time, you'll have the pump like this, and you'll have a little red bit like this. Right, you'll have a little red bit like this, and then you'll have a little bit more pump. Price will go like this, right? And then I'll just come back into that area and go like that. And yeah, I just know that from trading 5-minute time frame. The good thing about trading low time frames, even if you might not be super profitable on them, and you might be break even or just make a little bit of money, is that you get so many setups, because you can get hundreds, maybe not 100, you can get 50 setups in a day sometimes that you trade. So you just learn really, 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 really quickly. So yeah, you can get like a scalping account and put a couple of grand on or something like that and play around with it, just because you want to learn all the different setups and how the market moves. Because the market moves on the low time frames very similarly to how it moves on the higher time frames. So yeah, this is the higher time frames. The trades are a lot more likely to play out. Like, you have an ascending triangle like this that's been built over 40 days, like that's going to fucking launch when it breaks out. Do you know what I mean? But if you have a 5-minute version of that, it might rally like this and hit a level of like a 4-hour or weekly resistance and then just breaks down. So you always get a lot more follow through on these larger time frames. But, this took a month for this trade to play out. Like, we were watching this chart for over a month before we got the trade, right? So yeah. That's pretty much. Anything else you reckon we need to cover off for setting stop losses?
That should be all good, dude.
Awesome. 17 new messages. How many charts are you analyzing at one time? I try to focus on just like a few key ones. Like, at the moment, obviously we're trading silver, trading oil. Bitcoin's been pretty quiet. Been trading Link and XTZ, watching Ethereum, USD at the moment. So try to keep it till around 10. Once you start to get through to too many, you start to lose track of them. But it's good to just do a scan through like every week. I suggest doing it on a Monday morning. Like, if you're a professional trader, you're trading full time in Australia, on a early Monday morning, go through and do your scan. Watch me and Troy's Monday video, because we'll talk about any videos. We'll talk about any trade setups that we've seen in our scans that are obvious that we want to look at. But yeah, being consistent and having like your schedule set. So every single Sunday night or Monday, you go through the whole market. It's better to wait until the legacy markets open, which is 8 a.m. Monday morning for Australia. And that's generally when pretty much everyone in the world starts looking at the charts and sees if there's any gaps and stuff like that, because it might change your analysis compared to doing it on a Sunday night. But you can do it on a Sunday night for crypto. It's not too big of a deal. So yeah, that's pretty much it. All right, XEM BTC looks like it's retesting the moving average. Let me go have a look at that. What was it?
XEM.
XEM BTC. Finance, huh?
Look at old NEM.
Jesus. Is that the whole chart? Oh, no. What is going on here? Yeah. Back here, looks like we've got a bit of a support and resistance flip at the moment. So a really good trick that you guys can use is if you have RSI or stochastics RSI, wait for the stochastic RSI to start to turn up, right? So this might have been a good example, right? Once it starts to break back up. So obviously this is rolling over, right? But a lot of the time when the 4-hour stochastic RSI starts to push, will be when it's starting to get ready to rally. And you can also wait sometimes for the 4-hour RSI to get into oversold area. We can have like a custom indicator, like Troy's made a whole heap and stuff like that, right? You get like a bull div or something like that, right? In a conjunction with a sort of like support resistance flip like this, right? And that could be an entry. If you're really bullish on NEM, this is no bad time to get into a trade, to be honest, because you've got a nice SR flip, right? If I was going to take that trade and I was going to enter right now, probably try and get in as close to this level and try and catch a wick as possible. And then you want to make sure that you don't get caught in some bullshit like this, because alts love to do this sort of stuff, right? Or you could just wait for it to swing the level and then reclaim the level. They're my favorite type of trades to take, ones like this, because people get trapped underneath the resistance level or underneath the support level. And then you can get into the trade on the bullish retest or after it closes above with like an engulfing candle or something like that. You can get into the trade and then most of the time it's upside from there because it's already tested being underneath this level. It's been rejected from being below your key support level, right? So if you test below the key support level and you reclaim, generally that's a very bullish example. And I'll show you an example of that on silver on the high time frames, right? And that this is like, when we get a little bit more detailed and we go into like Wyckoff theory and stuff like that, right? We can see multiple touches on this level, 1, 2, 3, 4, 5, right? We sweep the lows because it's obviously extremely important level for silver was 1380, right? We sweep the lows, reclaim that level, really clean bullish retest here. So this is a sort of entry that you want to be taking. And then obviously you have the sort of Morningstar reversal pattern there as well, when then that leaves into, this huge rally. So these are the sort of trades that, these are the best type of trades you'll ever get. Multi-touch level that gets swept and then reclaimed. The risk reward on these type of setups is better than anything else you'll ever get, right? So you could do something like this, but that's pretty goddamn far. So I'll just give it a little bit of space below there. That was sort of the entry candle. This guy here, the star, the doji, right? And then it pumped. Or you could get in like up here after it breaks, and then you would just put it below the Morningstar reversal through there because that's your level of support, right? And the other opportunity was to get in at the, at this sort of bull flag, right? Whatever you want to call that. Right, not really a symmetrical triangle. Some people would say that this is a symmetrical triangle or something. I don't know. But yeah, I always like to look more at what the candle closes are doing, right? So you could have got on that. Let's just say you got in late and got in the breakout. Then because of the way that you trade these, you want to have your stop loss below the flag. You probably just pull it down a little bit to be safe, right? And then, yeah, you'd be looking for the next level of key supports, right? Stuff like that. So yeah, hopefully that makes sense, guys. That's pretty much it, I think, from me. Probably handball it back over to you, Troy.
Sweet, cool. It's pretty much just a quick wrap up, guys, of this last one. I want to share my screen real quick. Cool. I'm assuming you can see my screen now. Cool. Where am I muted? No, you guys can hear me? Cool, good?
Yeah, I can hear you.
Cool. Sorry, I just want to make sure before we carry on. All right. This is pretty much just a quick wrap up of what we've covered, right? For me, data owns opinions. It's greater than. Data doesn't lie. So backward and forward testing on your own will give you first-hand verified data. It's easy to say or hear from another trader who says XYZ is better than XYZ, but you don't really know that, do you? So I highly recommend learning how to backtest, finding some form of a strategy that you can fine tune and the rest of it to then back and forward test that. Because with your statistics, which is your win percentage chance, or where you're most likely going to have to take profit or where your best entry is, when you know these kind of statistics, you're able to increase that risk appetite, which I covered before, without being stupid about it. And if you know in a particular market environment, like a clear uptrend, which means higher highs and higher lows on the time frame you're trading, that increases your chances tenfold. So if you've got a trending strategy that works, like the one that I'll teach you on day 4, you can start to increase those position sizes, and that's how you go from earning. Say, if you've got a $1,000 account, that's how you go from earning $50 per trade to $100 per trade, and how to start compounding that account into a lot more. And what that means is you take the profit and you reinvest that. And if you do compound it enough times, uh, your accounts get out of control and profit, as long as you've got statistics to back up your trading strategies, right? These are all being recorded. The email came out for the first one, Damien, already, and the email will come out tomorrow, I assume, for tonight's one, right? And the statistics, they can work in both ways. So if you know you've got a trading strategy that you like to take, I only started with $800, Luke, in 2017. So I think $1,000 is more than enough. So if you've got poor trading strategies, but the statistics are in your favor, you can still take them. But what I'd recommend is, because the statistics say it doesn't work out too often, but it still is a profitable trading strategy, to have a smaller risk appetite for those ones. So based on your statistics, you can start increasing and decreasing your trading strategies, which will allow you to stay in control of your profit, right? And your drawdowns won't be so big, because the poor strategies, you're expecting a possible or a higher chance of it going against you, so you lose less on those trades. When you've got maybe one trading strategy, and maybe that's a couple of moving averages or exponential moving averages, and that's your entire strategy, you're going to have to rely on that, and then you need to work out which environment that works best in. If you've got maybe 5 different trading strategies, they're all going to have their own statistics, right? And then you need to be able to know when and how to use each of them, which is why I'll teach and we'll go over the difference between technical analysis and trading strategies, because they're completely different things. And the statistics help you tenfold with that, right? And which is all it is just changing that risk appetite. All of this really all comes back to all the data. When you combine it all it does is it just helps you, right? How many pairs would you start with, or will you cover that in the strat session? How many pairs? Pairs? Do you mean trading pairs or SQN? I'm going to read into this, Bo. I've never actually used SQN, so if you've got any books or links on that, I'm keen as to learn. I have heard about it from other traders. I've never really looked into it, because what I do works, so I haven't really looked into changing what I do. But SQN sounds like it's all about data, and data doesn't lie. Trading pairs. So personally, you better to learn. So each market, and Kyle probably will agree with this, that each market seems to trade in its own way, right? So a certain altcoin might move in a certain way, because a certain collective of traders will manipulate it in the way they see fit. So something that I trade frequently usually is IOTA, and the USDT pair at the moment, and the AGI BTC pair, and the IOTA BTC pair. Now, I'm very familiar with the other traders who trade that in large quantity, so I know when they're playing and usually who's playing based on how they're trading. So you can start to learn these things if you do trade specific pairs. But I highly recommend to stick to Bitcoin or Ethereum. Just stick to the big high volume, high liquidity trades. So therefore, there's less manipulation to the chaotic side, where you see these just stupidly low wicks or high wicks and the rest of it before prices carries on like nothing happened. Now, Bitcoin and Ethereum aren't immune to that, but that's where I'd begin. If you're going to technical trade Bitcoin maybe first, and then branch out to the alts. The altcoins, to me, they're just a means to increase your Bitcoin quantity or your USDT value quantity, right? Where if you're a fundamental trader like Alex, you actually care about what these coins do and what they're achieving and the rest of it. For me, I really don't care what they do. I don't care if they cure cancer or wherever they're funding, like meth labs. All I'm trading is the ticker. Like Doge, for instance, we've all probably traded Doge or jumped on it, right? It's a shit coin. It's a shit coin, but it's made me money. It's actually my best trade of the year. Cleaned up about, I can't remember. I think it was about $55,000 off that one trade, right? And it's a shitcoin, but all we're doing is trading the tickers, trading the technical analysis, and just taking what the market allows us. We don't care what's behind the ticker. If it's on Binance or if it's on FTX, it's usually there for a reason. Unless there's no trade volume, or what's his name? Craig Wright is the owner of it. I don't think you're going to have a problem with that coin. So from this is a complete technical analysis approach to the market, right? All we do is we go to our charts, we put in this ticker, and we go here and we'll write Doge, right? This is literally a meme coin, right? It moves. Look how it moves. But we can still trade this. We can still make money off this. So who cares what we're trading? Hell, I'd even trade XRP if it's going to give me the right it's give me profit, right? Why would I neglect profit? So this is, for me, this is probably the worst coin, right? Fundamentally, but it pumps, right? And we trade. So trade these pumps where you can. If you catch them, fantastic. This is my approach to the market, right? I don't hold alt bags. I don't care about them. Yeah, these can go to zero for all I care. You got to keep in mind, guys, as well, that these markets, they move in cycles. There's if we were to put all of these altcoins into an index, they all went like this, right? They went up, got accumulated, went up, went up, went up, went up, and like this, right? And then they came down. And now they're all the way down here, and they're doing like this, which is what's happening over here, right? So these altcoins, they all do this. So you got to remember this one thing: the altcoin is not the project, right? These altcoins were just a means to make money, and a means to flip shitcoins into Bitcoin. They will move up when the projects are doing well, but they will come back down, right? So just keep that in mind, that the projects, all right, these projects here, and not the company behind them, because when this was at its highest was when it was the most fucked, right? And now they're probably working with banks and doing a lot more down here, but it's worth absolutely nothing in comparison to when it was at its worst, right? So keep your emotional bias in check and make sure you're not married to your Kyle said something to me that I'm married to my bearish bias, and that sat on my mind a lot because it's fucking true. Make sure you're not married to your bias of your fundamental love for an altcoin, right? So I trade AGI and IOTA frequently because I like what they do fundamentally, but I understand that this coin here could go to zero, right? And the company can still carry on doing what they're doing without the coin. Same with AGI and the rest of it. So just don't marry an altcoin. But we're a bit off topic. So just go back to just statistics. Data doesn't lie, right? And people with opinions can fuck off. Back test your data. Work out your own strategy. If you struggle, then maybe find someone else's and then work out how to improve that. But just log everything, because over time, if you're serious about trading, you're going to find out where the nooks and crannies are to strategies, right? Can you PM me that on Discord, Bo, if you were able to? I actually checked that in over the weekend in depth, because I've read up a little bit about it. All good, Corey. I hope you guys made a buck off that. Doge is my best trade of the year, dude. I fucking made a sweet little penny on that. So if you guys aren't in the Discord yet, just for those people who just said they joined late, join the Discord, come into the plus sign, write Bitcoin, right? Join it. You'll end up here at this channel. Once you're here, find this channel here called FTX Reaugust. Pop in your FTX code, right? And then I'll turn you into an FTX role, right? And once you've got that role, you'll be able to see all the extra stuff down here. And then go do the same thing to Kyle's, right? Join his, tag him, PM him, or drop your FTX link here, and he'll know where you're from and what you're doing, and he'll get you in as well. Mine goes to the end of August, and then everyone will be cut off. So get in, make the most of it. I've got one of my trading strategies in here. So if you are looking for a trading strategy, I've actually got a step-by-step list one here. It's called TTICS, this channel, and it's written up exactly how to trade it, but you've got to understand the aspects inside it. Let's go into the FTX section, and top right, you should be able to go into your account and then go referrals, and there should be an FTX code there. Yeah, the Dogenomics that I created was pretty cool. Cool. All right, I'll wrap up here, guys. I think we've done enough tonight. It's been just over 2 hours. I don't want to drain you too much more. Really excited for Tuesday and Thursday next week. That's when we'll start getting a bit more serious. And you guys will actually learn some trading strategies and how to actually implement this stuff. I hope you guys are learning something. Even if you know a few things or two, maybe you learn something. The takeaway point from here is data doesn't lie, right? For me and for Kyle, get your risk management calculation down pat and stick to that every single time. Don't ever think that you're better than it or that you know better or you're going to use more than what you're allowed, because you will wreck yourself.
Pretty much. Very true. And it just
You
helps
will
with the
wreck,
psychology of actually staying in the trade as well.
very much so.
A lot of the guys have done our course, like before they did the course and after doing it, they said that that was one of the biggest game changers for them, because they actually feel relaxed about their trades. They can just enter into a setup and, you know, live their life without panicking over if they're going to lose 15, 20% of their portfolio if they get stopped out. And that stops people from mismanaging trades while they're open and stuff like that. Because if you lose, you only lose 1% of your account anyway, so who cares, right?
That's exactly right. It really keeps that mental thing in check, because if you bet half your account on a trade, you're not going to blink until the trade's finished, and you've just completely tilted yourself. You've just risked too much money in your account, and it's the recovery of a 50% loss in this retarded scenario is huge. It'll take you a long time to get that back. Slow and steady wins the race.
Pretty much. Someone's asking about the ETFs that FTX has on their exchange, like Dragon. So Dragon is like all the Chinese coins.
Yeah. So if you guys join, if you're in my Discord, which I hope you guys are all joining to be able to get that month, I've actually got an FTX exchange bit here, and the FTX list is right here. You can actually download this for free, and then just import it into your TradingView, guys, if you want a direct one. Right, and once you're in the Discord and you've got the access to the private section, there's actually a trading material section here, and you'll find heaps of crap in here that'll really help you with your trading. I've actually got a trading guide here that you guys will probably check out as well. I think you guys will probably really appreciate this. No, that short URL's gone. Need to work that out. But there's a trading guide here, trading strategies as well, right? I think that kind of stuff will really help some of you guys out on top of what we're not offering, teaching during this. Cool. All right.
All right. Too easy. Thanks a lot for tuning in, guys. We'll see you all next Tuesday night at 8 p.m. Topics we're going to be covering off are going to be technical analysis strategies. Troy's going to be covering off his checklist strategy to the charts. I'll be covering off the move contract and how to calculate intrinsic value, and then all the other little tricks and tips that we've found works really well, like how to use Ichimoku Cloud, also how to use average true range as well to give you a little bit of an edge on the move contract, as if you should be longing or shorting from different positions, and also analyzing the market. We'll also do another market overview and trade scan as well. And then on the Thursday, we're going to be going over trading strategies more in depth. Troy's going to teach you one of his strategies that has an 84% win rate, which is pretty handy. He's already done the back testing for you. You just need to go and then do the forward testing, because no one can do that for you. And then I'm going to teach you guys one of my most profitable trading setups as well. So that's what's in store for next week. So thanks a lot, everybody, for tuning in. And we'll chat to you all next Tuesday. See you soon.
Awesome. See you guys.